What's up, guys? Eric here with MajorLeagueTrading.com for tonight's free video. And we got a market on our hands that's moving pretty well coming into earnings season. A little bit more than I would have expected in terms of movement today. But there were some really nice names, really good breakouts. And honestly, I'm looking for some continuation off a couple of those. We're getting a little bit extended here on the daily chart, for the S&Ps, even for the NASDAQ here. We've got this nice little push over the past few days, and Friday kind of looked a little bit like, hey, that's a pretty decent pullback. Is it the start of something a little bit bigger to give us a move lower? And that's pretty much exactly what I talked about in the morning right up here. So what I was looking at here is here's the morning write-up talking about earnings. We've got Netflix and Tesla. Those are both coming out here on Wednesday after the bell. You can see Tesla and Netflix right there. There's also a whole bunch of other names here on this list, which I talked about. Alcoa, IBM, NASDAQ, ISRG, all of these, right? So there's a lot of opportunity coming in, across the board over the next few weeks here. And the thing where we're at with this current market is, hey, yes, we can potentially go higher. But if we do get a pullback and it's a 2-3 day pullback, what's going to happen is we're going to see some names hold well during that move and probably even rally if we get that pullback, which the market doesn't necessarily have to do that. And those are going to be some of the things in which I want to focus on. But knowing how strong this market is right now in the move that we've had, the potential is there that we don't have to get that pullback. We can continue to go kind of sideways now and form a new range up in here. So that was kind of the question I asked was, last week we saw some insane strength come into the markets, but on Friday they pulled the rug on everybody and the NASDAQ was able to pull back about 200 points from highs, which brings us to the question for this week of how much more pullback do we need, or was that going to be enough? Again, I'm not personally a big fan of one-day pullbacks. So for me, I'm going to be watching to see if we can come into some lower levels and how we react from there. Now, again, if I'm thinking market's pulling back, I still want to be focused on those relative strength names. And for me, there was 2 of them on the board for today. There was actually 3, PA and W, which ended up working out better than all of them, but one that I didn't list here. So Apple here, talking about a nice gap this morning. Overall market is kind of the issue, whether or not it picks a direction. But I'm liking the potential for a 200 pin this week. So up over 192.56, I'll be looking at longs in here. So this is the trade in which I took today. I did trade a little bit of NASDAQ today right here down on these lows. 15.724s, I think, were my fills. And then was able to ride that. Didn't quite get all the way to the new highs, but I think I got 50s and change on some and 30s and change on some. So with this here, yes, I took a long, to kind of go back to that point, is yes, I took a long here, even though I'm talking about, hey, the market's potentially getting a pullback. Divergences, relative strength, relative weakness, all of those things, or a catalyst in a specific name, are standalone things. So even though we did get a divergence today, right after a one-day pullback, this ends up marking the low, right? And if we look at this here, I'll go ahead and pull this over. So this is the 4 grid, and the divergence is simply this. When one market makes a new low, for example, right here, when the NASDAQ comes down, gets this new low, you can see that the S&Ps, the Russell, and the Dow are all pushing to new highs here. So the NASDAQ is going, oops, sorry, wrong way. Let me catch back up to the rest of these other markets. And that's the way in which I took it today and the way in which I played it from that divergence. Now, in addition to that divergence, I was also able to pick up a position in said Apple. Now, with this one here, I picked up a position on Apple initially right from the open here. So you can see here's Apple, and you can see I've got the 192 halves and the 195 calls. These 192 halves I picked up for $1.45 initially right at the open, right? So my plan was here, hey, we're getting this gap up, good relative strength, up over 192.56s. Then this thing has plenty of room to run. It does pull back twice, retest the level, and then has continued to work its way on up to the new all-time highs here, essentially, which I think we'll probably tag tomorrow, 194.48. You can see down here on that daily chart. And again, I'm thinking that this thing makes the move up towards 200 bucks. Now, on one of the pullbacks, I did add to that initial 192 half call position, I added these 195 calls. You can see I picked up 10 of those here for 80 cents. So all in all, call it $1.50 and 80 cents here. So I'm into this trade for $2.30 in total. Again, position size is still the same there at 10 contracts across the board. So I have a grand total of like $2,300 worth of risk into this position or capital, right? Now, am I going to let it go all the way to zero? No. Will I manage it accordingly? Yes. Did I have some initial risk, obviously, putting it on? Could Apple gap to 180 tomorrow and I'm out all, $2,300? Potentially. Not likely, but certainly potential, right? So I've sized this small enough where if it did go to zero, it's not going to be that big of a deal. I'm not necessarily looking for it to go to zero, but since we are holding it overnight, that is something that we definitely do have to consider, right? So with this trade though, my plan and my thinking behind everything is we've got a nice weekly daily coming into here. We're getting up through that 192.56 level, which is super, super important. Most likely new all-time highs tomorrow up over that 194.48. And it's also options expiration week. So if Apple is going to pin and make a move, it's probably going to make a move up towards 200 bucks here, right? So my thinking is, and again, 200 bucks at like 199 to like 199.50, I'm basically going to be out of these positions, right? So with these that I picked up here, 192 halves, I'm going, okay, $1.45. And my idea was, okay, I can give this about a 50% stop loss on the day, right? I want to put this position on as a swing trade, but I want to try and use intraday risk metrics in order to be able to put this position on. So at worst case scenario, the stock drops, it goes to 50%. I'm out about 750 bucks, right? Call it 700 bucks. At the same time, when I also picked up those 195 calls, I basically did the same thing. And I said, okay, these are trading for 80 cents. Half of that, if all went to complete crap on the day, and I didn't take my stop on some sort of predetermined plan thing, and we had made new lows and I didn't want to take it and I held on to it, and worst case scenario, it goes to 50%. I'm out about 400 bucks, which puts me right around my daily risk total size on a position, right about 1,000 bucks here. But with this one, it never gave me any real drawback on this one. I haven't had to take really any kind of risk on this position. And I haven't had to do anything with it so far. Now, hopefully that continues to be the case here and I can just allow this position to work with the understanding of, hey, at this point, yes, I do have some profits. Do I want to let this come all the way back to zero? Not necessarily, but if I do, I'm willing to go, okay, now my risk is about $1,000 in this position, 50% on each contract, right? I don't think that's going to be the case. But the way I'm sizing it is for, hey, a potential swing trade with a day trade risk metric that I'm still comfortable with. So as long as I don't hit that threshold, I can hold this position. And then now look to drive that up in towards the $200 number, which is going to give me, $7.50 on these contracts, so about $6 in profits. So that'll be about $6,000. And then on the 195s, I can get out of those for roughly $5. That's going to give me another $4,200-ish in profits for a grand total of roughly $10,000 on this position. And if we do the math on that, my day trade risk on this position at worst case scenario was going to be $1,000. Worst case scenario is if all of these went to absolute zero, I'm going to lose about $2,300. And if the trade works, goes to target, does all the things in which I want it to do, then it's going to be good for about $10,000. So in my mind right now, this is a 4R minimum trade with the potential for it to be a 10R trade here. And that's what I really, really liked about it. So quick back of the envelope math across the board on all of this as I was looking through it this morning. I wanted a $1.50 fill on those 192 half calls. I got filled at a $1.45, so I got a little bit of price improvement there from the open, so I appreciate that. And then now from here, we look to just manage this position accordingly. And as long as we really hold that 192.56s now, I think we're going to be good to the upside for that 200 pin. So anyways, kind of a long-winded explanation, but I wanted to give you guys a little bit of thought process and the thinking through not only necessarily just the trade idea from the chart perspective, but then how mentally I'm looking at it from a risk management and all of those things here going forward. So it also adds in, we do have Netflix, Tesla earnings, as we were talking about here, right there. And if all goes according to plan and those end up making a nice move, this will also be a little bit of a earnings play through some sympathy overall markets for me there as well. So anyways, that's what I got for tonight's free video. Take care. Hope it helps. And I will see you guys on the next one. Peace.